The PPP program is over. The SBA EIDL loan program is over. But if your business is still going through financial hardship, did you know there is still one COVID-19 program that is still available for your small business? That's what we're going to talk about in this video. Hello from Freedom Tax Accounting. We're an accounting firm where we have been providing quality tax and accounting services now for over 20 years. If you're new to this channel, we provide strategies for small business owners so they can achieve their financial goals. Now, there is one program that is still available for all the businesses that went through financial hardship during COVID-19. And it's good for you to know that this program is still available because a lot of people think there's no more help since the PPP program and the SBA EIDL loan program, basically they are done. So to talk about this topic, I'm going to bring in my coworker, Carmen Huertas. Carmen, how are you?
I'm doing great. How are you?
Good. Carmen is our employee retention tax credit expert. And that is the program that is still available for small business owners called the Employee Retention Credit. So, Carmen, what is the Employee Retention Credit?
The Employee Retention Tax Credit is one of the credits that was first brought out in the CARES Act when all of the bills, that was put forth with all of these PPP, all these crisis aid funds were designed to get into the hands of business owners.
Okay.
It was one of the first credits that came out. However, it wasn't looked at immediately because PPP kind of took center stage and
Mhm.
the EIDL loans and
Right.
the grants. Also, in the beginning, there was a little bit of conflict because there was a debate whether you could get PPP funds and also this credit. But that was later cleared up as the law kept revising, later in the Appropriations Act and the Infrastructure Bill. All of that kept getting renewed, and that debate was cleared up, and it was stated that you can get it. So a lot more people jumped on the boat. They extended the date that this credit that was available through September 30th of 2021. But a lot of people think that that's where it ended and that you can no longer go back and claim it, but you can.
Okay. So now we're in 2022. You can still apply for the Employee Retention Tax Credit. You can apply for it retroactive.
Retroactively, yes. You have actually 3 years to look back and look at your numbers, look at your situation, have somebody take a look at it and see if you do qualify, and go ahead and amend the 941s for any given quarter that you do qualify in, and then you are able to claim that credit and get it processed and sent out to you.
Okay, so Carmen, we've been doing now employee retention tax credit for over, I would say, like a year and a half now for our clients. What kind of results have you seen?
The results are great. I mean, when we take a case, we make sure that the person qualifies and that they meet one of the two main conditions. There's a few outliers, but there's two main ways that you can qualify for this credit. Once you make sure that you do indeed qualify, you just fill out the paperwork the correct way, which is obviously an important part. But once we get that sent out to the IRS, every single case that we've submitted to them has been paid exactly how it's been calculated. It takes a little bit of time because they are a little behind on the IRS, but everybody ends up getting their checks with the full amount of the credit claimed.
Okay, and we've seen big checks come in for our clients.
Big checks, yes. I mean, it's incredible how much people spend on payroll and therefore how much you can get in this credit, because this credit is paying you back 50% of qualified wages or 70% of qualified wages. In 2020, there's different maxes per year, but that's a lot of money when you calculate a whole business, everyone who's on payroll. We're talking a lot of money, way more than the PPP loan put in people's hands.
Okay, so if someone wants to know if they are eligible for the ERTC, I know that there are many rules, but what should people look for, like, immediately? Okay, let me check my numbers to see if I can qualify. What do they need to look for?
The easiest way, without even looking at your numbers, is to know if you were under a government mandated full or partial shutdown. Everybody knows, and the obvious cases were the restaurants. They were definitely shut down. They had to only operate with drive-throughs. So those are like the people that really are easy to tell. But there's other places. There's retail stores, there's, beauty salons, there's dentist offices, there's so many other industries that were under shutdowns, and maybe they weren't 100%, but they had to modify how they saw people,
Mm.
schools, etc. There's a lot of different cases. So that's the easiest way, because there you don't even have to look at if you had a reduction in numbers. If you were under a full or partial government shutdown, and you can prove that by looking up the local ordinances and the local orders that were given, the executive orders,
Okay.
you can see exactly what times that place was under a shutdown, and that period is a period that you're eligible to claim the credit for.
Okay.
um, the other way is to see if you had a decline in revenue, right? If you had a revenue reduction, both 2020 and 2021, you have to compare them to 2019, because that was life before COVID.
Hmm.
So you have to look at it by quarter. And in 2020, right, starting from May 13th through December 31st of 2020, you got to look at the quarters and compare them to the same quarter in 2019. And you have to have had a 50% reduction in any one of those quarters in order to qualify in 2020. In 2021, again, you still look at it by quarter, but the reduction is only 20% or more that you have had to have compared to 2019, same quarter, in order to qualify in 2021.
Okay. And important for our audience to know, these are businesses that have employees in payroll.
Correct.
Self
Payroll means
payroll
not self
means
employed. Yes.
exactly. So if you're
So,
self-employed, you don't qualify.
no,
So if you're self-employed and you have don't have employees as W-2 employees, not
correct.
1099s, those
Correct.
don't qualify.
Super important qualification and clarification. You know that you're on payroll because when you look at your pay stub, or the employee looks at their pay stub, they have taxes taken out, Social Security and Medicare and federal withholding taxes. Those are people that are on payroll. If you're just hiring somebody and paying them cash, no deductions, those people are not on payroll. Those are subcontracted out.
Okay. And I think the other example we see a lot is I'm the owner of my own business,
Mm-hmm.
and then I'm the only person in payroll. Do I qualify for the RTC?
That's an easy no.
Okay.
There are several rules. Once you figure out if you even qualify, if you fall into one of the two categories, if you had the full or partial shutdown, or if you had the revenue reduction, say you passed that first test, then you got to take a look at who's the owner of the business, right? You have to identify who the owners are, and whoever the majority owners are, that person cannot be included. Their wages cannot be included in calculating this. So anybody who has 51% or more ownership in the business does not qualify. Neither does anybody related to them. Okay, so I may be the 51% owner. My husband is not part of he's not an owner, but my husband is on payroll, and so am I. Well, for purposes of the credit, my husband, because he's married to me, he's also considered a 51% owner, and therefore he cannot. His wages do not count for the credit.
Nor the children, nor
Children,
the
cousins, brothers,
brothers.
aunts, uncles, grandparents,
Okay.
nobody related to me legally at all.
Qualifies. Okay.
Mhm.
Perfect. Now, I know that we've done several ERTCs, and thank God we've been able to get thousands and thousands of dollars to our clients.
Correct.
Um, but now it's 2022. What is there a drawback of applying for the ERTC now? Because we're basically gonna go back 2020 and 2021. We're gonna ask
Correct.
for the credit retroactively. Is there any drawback to doing that now in 2022?
Yes, the drawback is the inconvenience of having to amend your 2020 taxes, which most of you have probably done, and most of you have also done 2021, but there's still a window. People with extensions still have not done their taxes for 21. But if you have done your taxes, you are going to have to go back and amend them, because whatever this credit amount that you're getting back is not taxable income. However, you have to reduce your salaries and wages deduction by the amount of the credit that you get. And that will affect your profit, and it will affect, even the K1 if it's an S Corp, right? Or a partnership, it's going to affect the K1 profits, which if the personal taxes have also been done already, you're going to have to amend those as well. So it's a little bit of a domino effect, and it will involve the amending costs and
Okay.
time. However, most people are getting back a pretty good amount of money, which
Yep.
I would say more than pays for the inconvenience.
Exactly. So if somebody wants to know if they qualify, they can just call us and then we can give them a consultation, correct?
That is correct. Yes, you can call us here at 407-344-1012 and schedule an employee retention tax credit consultation with the person who takes care of you on the phone. And we'll give you a 30-minute time slot and we will evaluate your case and see if you would qualify or not before getting into the details of your numbers. We want to understand your situation, see if it's even something that is going to be applicable to you, and then we'll move forward beyond that.
Perfect. So now you know PPP is gone, no more EIDL, but there is still the employee retention tax credit available. And believe me, we've seen most of our clients' checks and they're getting back a lot of money. And
A
important for
lot.
people to know that it takes time.
Mm-hmm. It does. You have to be patient. The IRS is not doing anything quickly nowadays. I don't think anything is moving quickly nowadays, but
Yeah.
on average, I'm seeing the refunds are taking about 6 to 8 months for the person to receive a check.
Okay,
So you
perfect.
have to be patient, but they do get paid out.
Perfect. So now you know there is still financial help available. And important,
Hmm.
this is not from the SBA. This is an IRS program, right?
Exactly.
So now you know that there is still financial help available. If you want to know
Hmm.
if you qualify or not, call our office 407-344-1012 and schedule your employee retention tax credit consultation. All right. Thank you for watching this video. If you have received valuable information in this video, please like it and share it with another business owner. Thank you, Carmen,
You're
for the
welcome.
interview. All right. God bless you. Bye bye.
God bless you. Bye.